G'day everyone, welcome to this week's Facebook live stream, and it's good to see you. Thanks for joining me, and got a few things going on. We've had a huge week here. We've actually redone the whole website. We've been working on this for months, and Rhodey, our IT and marketing whiz, has rebuilt the website, and we've transitioned the whole thing yesterday. So, and the reason we did that was to speed it up because our old website was too slow. It was taking far too long to load, and so this one is supposed to load in 1 second. So I hope you notice the difference in speed. And we're still sorting out a few little bits and pieces, niggles and so on with the site. So sorry if it's been a bit of a problem for you. We've tried to minimise that. We think that it's been pretty good. These technology things are always kind of difficult to achieve, but we've managed, I think, to do it. And having done that now, we can set up the app, which is sitting there waiting. The app's been built. It's taken 6 months or so. It's been built for a month or so, and I've just been waiting for the new website to be finished so that we can connect the two up. So now we're going to go full steam ahead to connect up the app to the website, so that it sort of automatically loads up or populates the app. And so that should be a couple of weeks, I think 2 or 3 weeks, the app should be working. And the reason we're doing the app is to make it easier for people to listen to the audio, because at the moment I know that using the website on the phone is quite difficult. So the app should make it much easier to listen to the audio, and then what we'll probably do is, as well as having a menu of individual interviews for you to listen to, if you want to, you could also we'll also just play the stuff continuously, so that you can just tune in to the app whenever you like, when you get into the car, or you can start walking the dog or whatever you're doing. And just have a listen to what we're playing at the time, because it'll always be something different. We're producing at the moment about 3 or 4 hours of audio per week, and we'll just I think we'll just play that continuously over and over, and you can just listen to whatever's going at the time, or else you can look at the menu of interviews to see how that's going. But anyway, that's the whole purpose of redoing the website as we've done this week, and building the app, which will be connected up in a couple of weeks' time. So I hope that works out well. We've got the big lunch next week. We're able to offer 50 doubles. It's 100 people to come for nothing. That went in about 5 minutes, I'm afraid. So, which was great. I'm looking forward to seeing you there, and we will be having, for those who missed out, don't worry, we're going to have a series of lunches. I'm just working on a deal to have, what I'd like to have is monthly lunch, travelling around the country, because I know a lot of you don't live in Melbourne, of course, and so we'll come to you in future, and we'll be having a lunch. We'll be having lunches in Sydney and Brisbane and Adelaide and Melbourne. I'm not sure about Perth. We'll try to get to Perth as well, but definitely the East Coast states, and we'll try to do them pretty regularly, with interesting guests for you to talk to here and ask questions of. That's the plan. As you can tell, the product, the Constant Investor, is constantly evolving. It should be called the Constant Evolution. We're a year old next week, and when we started last July, all it was my Saturday overview and the Talking Finance podcast on Thursday, and it's certainly come on since then. We're publishing every day now, as you know, and but I'm happy with the product now. I think we've got it right. Publishing kind of every day, including now with market timing, Percy Allen stuff. That's going out. That'll from next week, not this week, but next week. Percy's market timing signals will go out on Sunday, and so we'll be publishing every day, 7 days a week, including the market timing signals on the Sunday and the Saturday overview, and also the CEO interviews on Monday, and fundies on Tuesday, Research Watch on on Wednesday, and the broking analyst interview, and also the Talking Finance on Thursday, and on Friday Money Cafe and success stories and community catch up. So, you know, I think it's a pretty solid product, I reckon, and well worth the money. And I hope you're enjoying it. I'd love to have your feedback if there's anything else we can change or should do as we go along. Now remember, the live stream, as always, is general advice and may not be appropriate for you, and is not personal advice. If you have any questions now, just pop them in to the Facebook thing there, and we'll get to them as we go along. David says, Alan, it's not obvious where the link for the Facebook group is. Hunted all over. I think do you mean on the website, David? Does he mean on the website?
Yeah, I'll fix it.
Rhodey says he'll fix it, David. Rhodey's fixing it. It wasn't obvious on the website where the Facebook link was, and so maybe there's no one there. I'm sure there is. First question. Gavin says, regarding the Sonnen interview, can you find out the battery life and warranty replacement and battery replacement cost? If the battery installation is approximately 10,000, then you could possibly assume around 8,000 to replace them. Question is how long? Big question is how many years warranty does Sonnen give the battery before requiring them to be replaced? Good question, Gavin. I didn't ask that question of the bloke, Philip Schroeder, yesterday. Should have asked him, of course, but I have sent him a text now, and I'm just waiting for his response. As soon as I get the response, I'll put it up on Facebook so you can see what it is, and I'll add it to the interview as well. Hopefully he'll respond, but he's probably out there doing interviews and stuff still today. So yes, I've asked that question. Hopefully we'll find out soon what the answer is, but Gavin, thank you. It's a good question. James asks, could you do an interview with David Kirk or one of the investment team at Bailador? One of their investments was recently put into administration and the full 8.5 investment written off, despite there being no indication for BTI in its may report that it required further funding or that there were other issues. I appreciate that some of these investments are high risk, but I'm concerned that BTI aren't being fully transparent about their investments. James, I rang up David, so I might do an interview with him, but I actually rang him up and said, what's going on? The answer is that iPro, which was 6.3% of their portfolio, has indeed gone broke, and they have indeed lost the lot, Bailador, $8.5 million, as you say, and the share price fell 5%-ish or so yesterday when it was announced. And thank you, Phoebe. She's brought me a cup of tea. Lovely. So the shares fell 5% yesterday, but also fell 5% the day before it was announced. So somebody, I would have thought, knew. As for the May report, well, he's saying he just didn't know then. It wasn't clear. I mean, obviously, they were a bit worried about the business, but there was nothing he says, there was nothing they could report then. I can understand your concerns about them, James, about them being transparent. I think it is difficult in these sort of situations when they're struggling, when they're having a problem. They don't want to make the problem worse by announcing that there is a problem, because often that just brings things to a head, so that's the last thing you want to do. And in any case, they're only an investor in the business, they're not actually running it, so they're kind of, I mean, they're in the hands of the board and the management to some extent. But they reckon they've learned some lessons. Will they get any money back? Well, they've written it off, he says, but they still have seniority and they have security. And he says that it's a possibility that the assets will be sold, the asset being the platform that this company, the technology platform this company's created. He says it's a possibility that someone will buy it, but really, it's only a possibility, which is why they've written it off. What else did you say? Yeah, look, he makes the point that they've got 10 companies in their portfolio, now 9, and the rest of them are going great, he says. So it just shows the need to diversify, because you can't find out everything in due diligence. I mean, he says they did a lot of due diligence on this business, but it turns out, he says, that they were deliberately misled. Now, that seems to me, if that's the case, they ought to sue them for fraud, but I doubt that they're going to do that. He says the main thing is with investing, which has been reinforced by this experience, that you've got to pick your people. The problem was the bloke who started the business and the former CEO, who they helped get rid of 18 months ago, was still a large shareholder and was hanging around, and he was the problem apparently. Now, I don't know much more about it than that. I mean, as you know, I'm an investor in Ballador. Partly because I know David Kirk and I think he's pretty good. So it was a matter for me of picking people, and I picked David Kirk, and he's made a mistake. I guess we all make mistakes. I think obviously Ballador won't be brought down by it. They've lost one of their 10 investments. 6% of the portfolio is gone, and the stock has now fallen 10% in 2 days. Hopefully, I hope it'll come back from there. James, if you still want me to do an interview with him, I will. Just let me know if that's enough, or would you like me to put him on the spot and publish an audio interview with him? Happy to do that. Just let me know, James, if you'd like me to do that. Kim says, how do I find a good independent financial advisor? My last financial advisor talked me out of not selling out of the market prior to the second and more severe crash during the GFC during September 2007. Can you help? Look, one of the things I'm trying to do here at the Constant Investor is to provide people with an alternative to financial advisors, because I think that financial advisors should be used for technical issues, in terms of how to structure your portfolio, things you need to know about super, stuff like that. But most people have got no idea, most advisors have got no idea about the market. I mean, I'm not saying I do either, to be honest, but really, most financial advisors are salespeople who've come up through selling life insurance and now sell investment products, and obviously they're now not allowed to take commissions for selling it, but they kind of find other ways to do it. They look after people's money, they take a clip for managing it, but they actually just give it to fund managers, and really they have got absolutely no idea about what the market's going to do. And secondly, the last thing they want you to do is to sell, because they don't make as much money anymore. I mean, if you take your money away from them and put it in the bank instead of in the market, then they don't make their 1% or whatever it is. And so that's really this is the fundamental problem with financial advisors. I've been talking at length about this sort of thing with Percy Allen, who runs Market Timing. Now, Percy started Market Timing after the GFC because he lost, I'm not sure, I don't think he'll mind, but I mean, like a lot of people, he lost half his money in the GFC, as you probably did too. And he came out of the GFC thinking, well, I can't let that happen again. And so he set up Market Timing. And the purpose of Market Timing, which is why we bought it, and it's now part of the Constant Investor, is to protect you and everybody from crashes. Because what the Market Timing signals will do is tell you what the momentum is doing, what the market is doing, and it won't get you out at the absolute peak, but it'll get you out below the peak, just below the peak, and before the worst of the crash. And there's really no other way. I mean, financial advisors won't help you. Some gurus did say early on, in 2007, even 2006, there's a crash coming, get out of the market. And some people did. For example, I bumped into Harold Mitchell sometime during early 2007 in the airport and said to Harold, things aren't looking too great in the US, you should be careful. Because of subprime mortgages, Harold then went home and sold everything and saved himself a fortune. So he got out before the crash because of me, and I didn't get out of the crash. I mean, I sold a bit, but Jesus, I still got stuck. So, bottom line, Kim, really, it's your money. You have to make your own decisions. That's the trouble. That's the trouble with putting it in the hands of a financial advisor. It's not their money. They are motivated by something other than what you're motivated by, which is to save your capital. They're motivated by earning fees, and they don't want you to get out of the market. So, I just think it's a matter of understanding what you're doing, and I think really most financial advisors should be used on a project basis, set you up, that's it, thanks very much. And you need to find some other way of getting advice, such as the Constant Investor. Barry says, can you look at having an option to print from the website in PDF format as you used to do in the early days with Eureka Report? Okay, I will. I remember that actually, because the deal, what I decided with Eureka Report, because I wanted to, when I started Eureka Report, this is back in 2004, I wanted to do it on paper, because that's, because nobody had internet in those days, or not many people did. And so I started I did all the numbers on a business plan based on a paper newsletter, and the trouble was I couldn't make it work. It was just too, it was impossible. The trouble was getting the paper to everybody. There's too much delay, too expensive, couldn't make it work. So I had to do it online. And I thought, well, everyone's got a printer. So rather than me printing it and delivering it to you, I'd send it to you as a PDF and you can print it. And that's kind of what happened. Since then, people seem to have got used to reading stuff online and on their phones and iPads and so on. So there's less of that. But Barry, we'll have a look at that. It shouldn't be too hard. I'm sure we'll be able to do something along those lines. Some sort of, at least, if not a PDF, then just some sort of printable, more easily printable version. Andrew says, battery life is usually measured by a number of charges and discharge cycles rather than time or years. Thank you, Andrew. I'm still waiting for a text back from this bloke, Philippe Schroeder. He hasn't texted me, but so maybe he'll tell me the charge and discharge cycles rather than times and years. Sale asks, when buying small, medium cap stocks, what are the key risks to be considered? Number one risk, sale, is liquidity. Can you get out? Is there enough liquidity in the stock that if you need or want to sell, you can get out? That's the most important thing in some ways. The second key risk is about the people. With big companies, you get a sort of a continuous culture, and that's what matters. It's the culture. CEOs come and go, obviously. They're very, obviously, CEOs are very important in big companies, big banks or whatever they are, mining companies. They're important, but they do come and go. And the most important thing is the ongoing culture. With small companies, it does more often tend to be all about the individuals who started the company and now run it, rather than the sort of ongoing culture of the place. And so the key risk is, are they good entrepreneurs? Are they, do they have persistence? Are they honest? David Kirk's just came up against that problem with iPro, one of his investments. We've just been talking about that. The problem there was about him not sufficiently guarding against people people problem. So I reckon that's it. Liquidity and people, they're the main things. You want to make sure they've got enough cash, because it'll certainly be damaging for the business if they have to come and raise money, although, you know, most of these businesses, small companies, are in the process of raising money, and it's to be expected, but you just need to have an understanding of what they're likely to be up for. So you need to have a look at, particularly if they're pre-profit, a lot of these technology businesses aren't making money yet. I just interviewed one this morning, in fact, fantastic company, which we'll publish the interview on Monday. It's called New Hera, and they've made these intelligent ear speakers. What are they called? Ear pods for your ears. And they sound great, actually, but they've only just started selling them the last few months. They've been developing them for 3 or 4 years. They're like little computers, and you can adjust. You can listen to it. Sort of cuts out external sound and all this stuff. You can wear them while you're driving, and they'll help. This is the thing that really interests me about them, is that they'll help you when you go into a noisy restaurant, because they turn down the noise of the restaurant and turn up, because they've got little microphones in them. You can hear the person sitting opposite you better. Sounds great to me. Anyway, they're pre-profit, just starting up, just starting to sell, just been raising money, so they've probably just finished raising money. So you know, you've got to understand how much cash they've got, how much cash they're burning, and given the amount of money in the bank and how much they're burning, are they going to need to raise some more? And you know. And then to try to understand. I mean, I'm sort of, with these interviews I'm doing, I'm asking a lot of those kind of questions. How much cash you got? Do you need to raise more? And you know, what are you going to sell the product for? How many do you expect to sell? All that sort of thing. And you know, really, it's just a limit to how much you can protect yourself. To be honest, I mean, a lot of these things sound great, turn out to be not so great. Duncan says. Arvo Duncan, do you think the next 6 months warrants holding a higher cash weighting than usual in one's portfolio? What percentage of cash would be sufficient? What is your normal percentage of cash as well? Michael says, please don't wear... Oh, okay. What's your normal level of cash? Now, so I think... I do think we're likely to see some volatility over the next little while. I think that a lot of people are expecting there to be not much volatility. Volatility has fallen a lot. Markets have been stable lately. The reason to hold cash is because the market's overvalued and you think that it's going to come down, and so you'll be able to buy some investments more cheaply, and you need to have cash in your portfolio to do that. I mean, I think you'd normally want 10 or 20% cash at all times to take advantage of opportunities, and also to protect yourself a bit. The next 6 months, I don't know, Duncan. I mean, I'm not sure I would go more cash than usual right now. You know, the one thing that's worrying me at the moment is North Korea, which I think is getting to the point now where investors have to take notice of this, and to, you know, there may be a case now for taking some defensive action in the light of what's going on with North Korea, because it's starting to get quite worrying. I mean, the thing about these kind of situations and volatility is that it's usually some kind of black swan that you don't know about that comes along. The things that are known about are discounted, and you know, that's fine. So the sort of the 9/11 terrorist attacks, for example, those kind of events do kind of bring markets down. I don't think though that we're heading into some kind of bear market, particularly globally. I think that the Australian market's got some challenges ahead, but I'm not sure about. I think 20% cash, which I'd regard as a kind of the upper normal level, would be sufficient at the moment. In general, obviously I don't know your circumstances, Duncan, and I can't give personal advice, and I'm not giving personal advice. This is purely general. My sort of situation would suggest that in general, 10 to 20% cash is okay. Michael says, "Don't wear earbuds while driving, please." Well, that's the thing, Michael, about these ones. What they're saying is that they connect with an app, right? And you have the app. You have an app that connects to your earbuds, and you tap the driving mode, and you can wear them while you're driving, and you can hear everything around you. I'm just saying. I mean, I'm going to get some because I think they sound pretty interesting. I'm going to get some, and I'll let you know whether you can actually do that. I'm mostly interested in how they operate in restaurants, but I actually drive an old car that doesn't have very good radio in it, and so it might be useful driving too. Matthew asks, any chance we could have a portfolio defined by someone like yourself in areas such as large cap, mid cap, small cap, or other defined parameters, and have one commentator pick a stock in each category? Right. Well, that's interesting. Do you mean, and you can put this into Facebook at some point, Matthew, or give us a call here. I'll chat to you. But do you mean that I that I construct the portfolio and then we get commentators to pick stocks to populate it? That's an interesting idea. Email in with your details, Matthew. I'd like to talk to you about what you've got in mind, and I'll give you a call. Mel says, "Hi Alan, interested in your opinion on the long-term viability of Bitcoin, given that it's the currency of choice for ransomware and other illicit activity on the dark web because it's untraceable. Will governments crack down on the currency? Are they able to crack down on it, outlaw it, or even regulate it?" Interesting question, Mel, and I've been giving this a lot of thought, and I actually think that the governments will have to crack down on it. They will probably have to outlaw it. They will certainly have to ensure that it is not legal tender. There are about 700 cryptocurrencies now. Bitcoin is the largest of them, and its market share, its market capitalization represents about 40% of the total market capitalization of all the cryptocurrencies, which is about $100 billion. And Ethereum is about 30%. So they between Bitcoin and Ethereum, they're 70% of the total, and in the other 700 or so, cryptocurrencies are in the other 30%. And people are speculating on all of those currencies, possibly more than on the little ones than the big ones, Bitcoin. I think it's actually a scam, to be honest. I kind of been looking at it and reading about it. I've written a few times on it, and I've come to the conclusion that the whole cryptocurrency thing is a scam. I mean, people are trading them in the expectation that they'll become a currency at some point, but they can't really. I mean, how can you have these things as a currency, a proper currency, when they are limited in number? Like, there's only ever going to be 21 million Bitcoins created. Well, I mean, I read today someone predicted that the price of a Bitcoin would rise to $10,000. I mean, actually, it could be $1 million. Because if it became a currency, because it would have to be divided into so many little pieces that in order to buy a cup of coffee with Bitcoins, you know, you'd have to have a millionth of a Bitcoin, in which case the actual Bitcoin is worth a million or more. And I just don't think you can have a currency that goes up in value or fluctuates in value like this. I mean, you can't have something... I know that people trade currencies generally, and they do fluctuate a bit in value. Obviously, there's a market and they go up and down and all that stuff. But really, you can't have things going from $10 to $1,000 and then call them money, I don't think. So I do think they're going to have to do something about it. I don't quite know what. And you know, all this illicit activity on the dark web using bitcoins. I actually think that the people behind bitcoins and all of these things are anarchists. Actually, what they're looking to do is bring down the government. They want to have a situation where we're all just trading with each other. Life's wonderful, and there's no government anymore, which is a anarchist utopia. Which is completely unrealistic and cannot happen, in my opinion. But I'm not an anarchist. David says, Alan, on the advice issue, might it be worthwhile developing over time a question of FAQs on investing, covering all the basics for reference? Might wind up as a book in a year or so. Yeah, that's fair enough. That'd be good. Yeah, let's do that. Thank you, David. Good idea. I don't quite know how I'll do it, but there's probably a way. Andrew says, how familiar are you with Nassim Taleb's work, and what do you think of his writing? I think he's great. I am familiar with Nassim Taleb. He wrote the original Black Swan, and he is fantastic. So I would recommend Nassim Taleb. His other books, the books that I've read, have gone out of my mind. I can't remember. I need to tell you his books. So he wrote The Black Swan. And the one that I really liked was Anti-Fragile, Things That Gain from Disorder. That was interesting. That's, I think, his most recent book, and I follow him on Twitter. He's good on Twitter, and he's always got something interesting to say. So, yep, agree with that. Andrew goes on to say, what are your thoughts on Rupert Murdoch's career as a business person, media mogul? Well, I'm a bit conflicted, Andrew, because I'm still on Mr. Murdoch's payroll. So, of course, I think he's a wonderful person and a towering genius. What can I say? Actually, he is a newspaper genius, no question about it. I mean, his record in publishing tabloid newspapers is second to none. And, you know, obviously he's turned himself into a billionaire many times over as a result, created a dynasty, and totally refuses to die. So his poor children, hanging around waiting for him to cark it, can't get their hands on the money. Can you believe it? And he keeps marrying people, which must be driving them crazy. But there you are. That's the privileges of being Rupert. He certainly, I mean, I would, to be honest, you know, love him like a father, but I would never invest in one of his companies. You'd have to be mad. I mean, I probably said more than I would like to say. That's it. Rob asks, Alan, is the Reserve Bank of Australia in a state of paralysis to effectively implement and use monetary policy given its inability to raise or decrease rates since August last year? If the rates increase, as mentioned last night on the news, the dollar drastically strengthens and decreases its value, and decreases its risk of increasing household debt, which is under scrutiny due to the downgrading of banks by 2 credit agencies. So, well, yeah, Rob, listen, I'm not the Reserve Bank's greatest fan. However, you're pretty hard on them, describing them as paralysed because they haven't changed rates since August last year. I reckon they won't change interest rates for at least another 12 months. So I reckon you can expect the paralysis to continue for some time. But that doesn't mean they're paralysed, really. I mean, it just isn't the right thing to do to change interest rates. They should not cut them, because as you point out, household debt is already too high. And as happened last year when they cut interest rates twice in May and August, the housing bubble took off again. House prices in Sydney and Melbourne had been falling at the start of last year, and then 2 rate cuts caused the house prices to start going up again. So that just made more of worsened the housing affordability problem. So they don't want to do that again, but they don't want to increase interest rates because there's too much slack in the labour market. Wages are not increasing, and underemployment is at a record high. So they don't want to do that. So what they're going to do is they're going to sit on their hands for at least 12 months and just let the currency do its work. So what will happen is that other central banks around the world, the Fed, European Central Bank, Bank of Japan, Bank of Canada, will all increase interest rates or tighten monetary policy over the next year or two, and we won't. And as a result of that, the Australian dollar will fall, possibly quite a lot. I had Felicity Emmett on the phone today, interviewing for Tonight Talking Finance. She says the dollar, as a result of what we just talked about then, the dollar is likely to fall to 70 cents. She reckons 60, probably not. I reckon it might go down to below 60, below 70. And that decline in the currency will be what supports the economy. Because it won't really have an impact on the housing market, and really what's going on therefore is that other central banks will do the Reserve Bank's work for them. So yeah, I don't think it's a state of paralysis. I don't think they're going to do anything with interest rates for a while, and they're basically sitting back, allowing other global central banks to do their work for them, which is fair enough. Rob continues, what are your thoughts on the Euro Central Bank being hawkish on rate increases as Spanish banks look shaky and Italian banks are being bailed out, which these banks also carry 1/3 of all bad debt in the Eurozone? I do note in your weekend overview that increases in the ECB rates could be attributed for more leverage if there was another financial crisis. Yes, well, what I was saying on Saturday, Rob, is that I think that all the central banks, particularly ECB and the Fed, are really worried because they've got interest rates, too low. I mean, particularly the ECB, the policy rate there is minus 0.4%, and they're still pumping 60 billion euros per month of quantitative easing into the economy. So they've got to normalise monetary policy fast, because if there's another downturn, there isn't sign of a downturn coming at the moment, but downturns always happen, and if there is one in the next few years, they'll be in no position to do anything about it. So they're starting to get edgy about the fact that they've got sort of this ultra loose monetary policy still for a long time, and they are getting to the point where they'll have no leverage, no ability to combat the next downturn. So they really are keen to start to normalise. That's what they were talking about last week, which is what I wrote about on the overview on Saturday. And really what was interesting, because at the Reserve Bank this week in Australia, the expectation was that the Australian Reserve Bank would join in and also start talking about interest rates going up and tightening monetary policy as the other Reserve Banks, other central banks have been doing. And that didn't happen because, as I was saying, that what actually the Reserve Bank wants is for the Australian dollar to go down as the other central banks start to tighten. And Rob goes on, is there any chance that you could get Ian Verrinder for interview about Australian house debt levels and our close reliance on China? He's been writing some stellar articles recently on these topics on ABC Business News. Indeed he has, and I've known Ian Verrinder for years, decades in fact, and I talk to him every second day about one thing and another on account of his business editor at the ABC, and it absolutely never occurred to me to interview him, Rob. But there you go. What a good idea. So, all right, we'll interview Ian Verrider. Why not? And see what he's got to say. Because he has got interesting things to say, and he's been around almost as long as me, which truly is saying something. Andrew says, what do you think of Fairfax Domain's prospects now that private equity has pulled out of the takeover? Well, I interviewed Roger Coleman the other day, who is a fairly entertaining retail analyst. He reckons Fairfax is a buy at under $1. Yeah, maybe. I mean, I think that the problem with that is that TPG and Hellman and Friedman actually got to look in the data room. You know, they got to look under the skirts or under the bonnet, whatever metaphor you like, and they didn't like what they saw. And it was actually quite interesting because the Fairfax papers, the Sydney Morning Herald and the Financial Review, reported that. So Chanticleer and Elizabeth Knight both said that TPG and Hellman and Friedman looked inside the bonnet in the due diligence process in the data room and walked away because they didn't like what they saw. Which I think is an interesting thing to have read in those Fairfax papers. I mean, if it was News Limited, you would never have read that. No way. They would have, the News Limited papers would have launched a jihad against TPG and Hellman and Friedman, because that's what they do. They would have gone after them. In fact, so anyway, the Fairfax papers, I think that was quite interesting, that those guys walked away because they didn't like it. Well, that's a bit of a bad sign. I mean, it comes down to price. Those guys were proposing to bid $1.20 or $1.25 or something. It's now 95 cents. So the question is it better value at 95? Possibly. You know, Roger says it is. I think the newspapers have absolutely no future. I don't say that lightly. You know, I've been working for Fairfax most of my life, including the newspapers. But I think they're stuffed, to be honest. And I think that businesses like mine, businesses like the Constant Investor, and will sort of chomp away at them underneath, and Google and Facebook are chomping at them from the top. You know, I mean, it's all about high quality, focused, niche content. They can't really do it. People like us can. And the other thing is Domain. Domain is clearly worth a good business. There is room for two real estate websites, REA and Domain. And the reason there's room simply is that the marketing budgets for houses are quite big, and with inside because obviously because the price of a house is large, and when you're selling a product, when you're selling an item that's worth $1 million, your marketing budget is probably $5,000 at least, and you can afford to list the thing in two places. Whereas if it's a car or a job, you can't afford to list it in two places, which is why you have a monopoly of Seek and car sales. With real estate, I think there'll always be two. There's room for two, and there's room for a very profitable number two. So I think Domain's prospects are okay. Everybody says that it's very good to link Domain with the newspapers because newspaper drives traffic to them, which means that I absolutely have no idea why they're hiving Domain off as they're doing into a 70% owned subsidiary. I think it's crazy. I just have no idea. I think that the fact that Domain is currently 100% owned is a benefit to Fairfax that News Corp and its 60% ownership, or roughly 60% ownership of REA, doesn't have. But some of the shareholders in Fairfax, including Alex Waislitz of Thorney, are putting a lot of pressure on them to spin Domain off so that the value of Domain is crystallised. The problem with that is that what's left, the question is what's going to be the value of what's left, which I'm not sure I'm really not sure why they're doing it. Caroline says, "Hi Alan, there was an article about China doing a free trade deal with Mexico. Could you please give your opinion?" I can't. I'll have a look at it and write about it on Saturday. I did see something about it, but I don't really know enough about what the terms of it are. China obviously is extending its influence everywhere. So one's not surprised that they're doing a free trade with Mexico. But I'll have a look at it, if you like, Caroline, and I'll see if I can come up with something interesting to say about it on Saturday. Scott Pape says, "Alan, love your work." Thank you, Scott. Love your work too. What's going on with my request for your Twitter tribute to Black Hole Sun in memory of Chris Cornell? Who are they? What's Black Hole Sun, Scott? I don't know. Who's Chris Cornell?
Soundgarden.
Oh, Soundgarden. Right. Okay, all right. Soundgarden. Oh, there it is. Someone's playing. Could you hear that, Scott? Someone's playing it. That's funny. Okay, all right. So you're younger than me, Scott. That's the thing. So, I'm still stuck in Eric Burdon and the Animals. Black Hole Sun lyrics in my. Okay, I've got them now, so I won't read them out, but I've got them. I'll use them in my Twitter on the graphs. I've been using the band a bit lately, as you may have noticed. Matthew says, "Hi Alan, can you explain how Afterpay, Touch Corp and Afterpay Touch are related and their story?" Look, I was afraid you'd ask that, Matthew, really. I've been looking at that and thinking, what the hell's going on there? Afterpay's a good company. They have a relationship with Touch Corp. I think that Touch Corp handles the back office. I'm pretty sure this is the case. The Touch Corp is the sort of technology behind it. And Afterpay has bought them, basically, and they've absorbed Touch Corp and the technology into their own business because, they've taken off, Afterpay's taken off, and they've made all this money, and they have the capacity to, in a sense, vertically integrate Touch Corp into them. I'm pretty sure that's right. If that's wrong, I'll follow up and let you know. Well, there we are. Look, I've got to get down to the Saporito Cafe and have a little chat to my mate Kirby in the Money Cafe. Remember, this live stream and my answers will be general advice, so they may not be appropriate for you. Next week, we've got a bit of an agriculture special. I spoke to Stephen Anthony, my friend, who's the chief economist at Industry Super Australia, who's just done a big report on investing in agriculture. And I'm trying to line up a few agricultural businesses as possible investments. I think it's interesting. It's probably about time we had a look at that. We've done a lot on technology, but agriculture is a big part of Australia, and I think that there's some interesting businesses to invest in. So that should be. I'm looking forward to that. We'll be celebrating our first birthday next week with the discussion about investing in the digital age. And that'll be my overview next Saturday. So if you can't get to the lunch, fine. You'll still be able to read about what was said, and you won't miss a thing. I can assure you of that. Thanks for your company as always. It's been great. I'll talk to you next week, and in the meantime, I'll see you in your inbox on Saturday morning.